Good morning. A warm welcome to everyone who's joined us for the second episode of our new series, Finance Transformation Unlocked. For those who didn't catch our first episode, these sessions, we're inviting a variety of guests from the world of finance and treasury to share their experiences and insights and how we can improve processes, free up resources, and ultimately modernize finance operations. So welcome. Today's episode will be discussing ways in which finance teams can mitigate risk by integrating their operations and building more robust processes, which leads me nicely to introduce our guests joining me today. So morning, guys.
Good morning.
Good morning.
I'm Dan, campaign manager at AccessPay. I'm joined by my colleague Parvez Patel, who is a product manager working closely with our customers. I'd also like to welcome Hamish Johnson and Dharam Atwal from our partners at Muzulu. How are you both today?
Great, yeah, very well, thank you.
So Muzulu are an independent ERP consultancy practice specialised in IFS. For those of you who don't know, they're like a global business management solution, but we're dropping a link to Muzulu's details following the session. If anyone has any questions throughout, please feel free just to drop them into the comments section, either on LinkedIn or YouTube, and we'll pick these up as we go or at the end. So yeah, we'll kick things off. I'll open with a question for you, Hamish. Can you talk us through some of the problems faced by your customers when it comes to tackling risk in complex finance operations?
Absolutely. Thanks, Dan. Thanks for the intro. I guess there's really three key elements that come into this, I guess. The big one is transmission risk. And there are a whole lot of pain points in that process, but fundamentally we want to make sure that any transmission of payments out of the ERP suite is controlled. It's safe. It's not open to error. It's not going to be updated, intentionally or otherwise by somebody as it goes through the process. We want safety. That's really what it comes down to. On top of that, you get into the game of speed, and we're all saying, right, I want it to be digital, I want it to be faster. But a key one here that we often see is people say, oh, I need an urgent payment for whatever it might be, and that might be an absolutely valid business reason. But the standard process is deemed as being too slow. Okay, that's great, but as a result, they do a manual workaround that introduces all sorts of risk. So that speed of process and the speed of dealing with exceptional scenarios as well is absolutely key in our minds. And then the kind of the third part of this puzzle, and certainly in Muzulu's experience, is formats. There are a multitude of formats around the globe in terms of banking files. Here in the UK, there's BACS domestically, but is BACS different to FASTA, different to CHAPS, different to anything else? And then you go international and talk about the ISO 20022 format. But there are a whole multitude of different formats available. Which one should we use? And the banks are all putting different requirements particularly on the domestic formats. Is there a way to streamline that whole approach and drive the risk and difficulty away from the process? Really is kind of where I see this going. So that's kind of my sort of top level view of some of the problems that we're routinely seeing. Maybe Parvez, you've got some thoughts on that, because I guess your experience is probably a bit closer to to being on the customer side of this equation in many cases.
Absolutely. I like the way you've sort of broken them down into three things: transmission risk, speed of process, and formats. The problems tend to generally arise when the business or the organization goes through some significant growth. It could be organic growth. It could be a diversification of that business into another sort of industry sector or through mergers and acquisitions. This growth brings about volumes on an operational level. So the procure to pay cycle, the volumes in that cycle increase. order to cash, the accounts receivables increase, and also on top of that, your banking relationships increase as well, especially if you've the organization has acquired a business which is multinational across multiple countries that have their own banks that they bank with within that those geographical locations. So straight away, you've the people that work in these sort of central finance, group finance, even the shared service functions that serve all these wider departments have to absorb these volumes of data, whilst at the same time maintaining their reporting standards and their reporting deadlines, because for those departments, month end is month end, quarter end is quarter end, and year end will always be year end, regardless of what comes their way. And it's in these situations that you find very sort of agile ways of working within these departments in terms of creating workarounds to accommodate these volumes. The workarounds are not necessarily process improvement workarounds, but more, let's just get stuff over the line, let's just get the reports in. And they tend to generally involve downloads from systems that are separate from one another. Group finance will be using one ERP, the subsidiary elsewhere will be using another. And the workaround is to download something from one to the other that consolidates. At the same time, they've got banks that they bank with. Head office has also got a banking register with a core banking group that they need to bank with. Again, that whole manual process of downloading statements, putting them in some kind of a bank rec, an Excel-based bank rec, sending that across to group finance. And that's all transmission, very manual transmission. And like you mentioned before, the risk is, because it's manual, there's the element of manipulation of data, there's the element of just human error. And also the other way in terms of making payments, certain ERP systems will have solutions in place to make payments in a particular format, whereas other departments will have an ERP system. They might not even have an ERP system. They'll just be creating a payment file and manually entering those in an internet banking system. It's really, really manual. And again, the transmission risk of creating a payment list and then give it to someone for them to then manually enter those into the system. That's critical data where you're paying someone and you don't want those touch points in there. Leading on to the speed of process, anything that's got a manual touch to it takes time, and the real-time reporting gets impacted in terms of there's an agreement between head office and also the subsidiary office in that if we can have this as quickly as possible, great. There tends to be a standoff in that, okay, we'll give you this once a month, for example, a bank rec. And therefore, by the time you've consolidated those reports into the central finance function, your query resolution is very much a reactive one. By the time you've seen something go wrong, it's too late, and then you're spending as much time tracking back to find out what happened originally. Carrying on from that, some organizations they have very sort of modern digitized ERP systems integrated, like IFS, integrated with AccessPay. So everything's integrated. So then when they experience volumes coming their way, it's easy for them to quickly integrate that extra volume within these functional systems that have standards and formats in place that everything must work within, so that there's lots of control in there, and straight away, very quickly, the central finance function has visibility of what's happening. On the flip side, we end up with disparate systems, disparate processes, disparate policies and procedures, and in that environment, it becomes very difficult to control, to have visibility, to have anything in terms of a format that you can easily use to consolidate into something meaningful. So
yeah, I think that's a really interesting point, actually, because it's the more that that growth happens, and you mentioned various ways it can happen, but the one thing that generally doesn't keep pace is headcount in the team that's dealing with these, particularly
Absolutely.
things like reporting, and so I think those issues become sort of exacerbated, don't they, typically by that kind of scenario. So
absolutely.
Yeah,
So now I've set the scene, Hamish. It'd be great to get your insights on the complications organizations face in terms of cash visibility and risk when the operations are so disparate.
Yeah, absolutely. And I guess I'm trying to sort of step back a little bit and look at things a little bit generally rather than specific situations. But in my mind, one of the challenges that this sort of scenario brings about is the fundamentally the visibility of the cash position. And in my mind, the key thing here is that the earlier and better visibility you have of your cash position, the more informed your decision making can be at an overall sort of business level. There may be opportunities in your business that you can invest in, and if you've got confidence in your cash position, then you might be able to invest in those opportunities earlier. And as a result, your return on investment is going to be higher. Really simple sort of logic, but I guess this is where it all drives. That if we've got the funding to do something and it's already fundamentally within the business, great. There's nothing but success to be had there. And so I guess a lot of this sort of thing revolves around speed. The big complication is how quickly can I get to this? And the faster you can do it, the better. And inevitably, if you've got one bank account globally, I go for the ultra simple. It's nice and easy. You can do a reconciliation every day potentially, and that's great. But if you've got multinational operations, inevitably you're going to have multiple bank accounts globally, potentially, as we've kind of alluded to already, multiple banks involved as well. It just starts to get more and more complex really quickly, and certainly as businesses acquire and adjust their operations globally, then the likelihood of quite a varied banking estate, shall we call it, kind of comes into the discussion quite quickly. Certainly one of our customers has several dozen banking relationships in play globally, and that complexity is what drives a lot of the impact. And so I guess the big summary of that is that ideally you want as much accuracy as you can possibly have. That kind of goes without saying, but it needs to be useful accuracy, and by that I mean you need to have it at a point in time that is going to drive and help drive the decisions that are going to be critical to your organization's success. If we can get to that sort of phase where information is timely, information is accurate, or accurate enough anyway, then that is absolutely key to business success. And that's kind of where I see this kind of relationship between the ERP suite and the banking network. That connection point is absolutely critical to a lot of that information. That's certainly where my thinking is on some of the complications that are coming about. I don't know, Dharam, do you have sort of any thoughts around the operational infrastructure and where that might sort of lead in your opinion?
Sure. Yeah. Well, I think Parva's made a number of good points about the issues that can sort of arise, and I sort of alluded to the headcount issue is always a problem, that you tend to not grow the team or just be able to grow the team, certainly if it's organic growth. But even through acquisition, you're not able to kind of grow the team in line with those requirements. And, inevitably it leads to, a number of issues, really. So, I mean, firstly, you've got the fact that, Parvez mentioned it, that you've got a lot of manual processes, and that increased volume can really mean that, there's more and more process variation as you, even as you expand the team. Different people using the same Excel spreadsheets or similar Excel spreadsheets may come up with slightly different results. And certainly where subsidiaries are involved and might be doing things and reporting things, used to reporting things in a slightly different way, that can raise quite a bit of difficulty, really, in kind of reconciling the various items. I think the other thing is that even where it's done successfully, it will often result in slower decision making as well, because it takes longer to pull these things together the bigger you get. And therefore, it can mean there's a real lag between the business having the information to make a decision and knowing, and knowing the true position, and that can be a real problem. And I think that, probably one of the biggest things that ultimately leads to is where there is uncertainty, businesses will end up with a really sort of a larger buffer, if you like, of working capital, because they need to have that in place for contingency, because they're just not able to see in real time what the cash position is. And that can mean that opportunities are missed, that potentially debts aren't being paid off as quickly as they might be, or effectively for the business, and that at various places money can be sitting around that could be being allocated and working harder for businesses. I think I think that's quite a typical sort of situation, really, that we'll see. And I mean, it's really, I think, about that. It's that, as we've alluded to a number of times, but I think the speed and the visibility is critical, and that's where the problems really kind of come in, because without that, you're not empowered to make decisions.
Yeah, I completely agree with you there that speed is absolutely key, isn't it? The faster we can have this information, given that it's probably varying on an hour by hour basis as payments are processed, for example, and funds are received. That speed is absolutely key. And there are a lot of organizations around the world where bank recs are, for example, done on a monthly basis. But if you double that and did it twice monthly, would that mean that you were able to make better decisions? Imagine if you went to weekly or daily. We're not talking about second by second by any stretch at this point. It's just having the information easily to be able to do things more regularly is key in my mind. And I guess where that kind of drives out as well is, okay, if speed is key, how do we get to high speed, high velocity, as it were? And I guess the big thing is having a consistent sort of process. If the process is absolutely consistent, everyone drives it the same way, and things that are able to be automated are automated, then the ability to drive consistency comes through really quickly. Because the workflow, if you like, is driving a lot of that for you, which obviously improves the position. And I guess that kind of drives to the decision making on reliable inputs. If you've got information being prepared consistently on a timely sort of basis, suddenly your decision making opens up really quickly. And I guess that's the kind of the approach that I see being really successful. A good example of this that Muzulu and AccessPay have worked on together is for a mutual customer who has operations across Europe and Africa, and they have multiple banking relationships. They've got multiple bank accounts in each geography, as you'd expect, but they're set up so that all their outbound payments go out through the AccessPay platform, and it's quite a streamlined process. Within about 30 seconds of something being transmitted from IFS, it's there in AccessPay, ready to be put into the banking network. But on the return leg, they have a batch of bank statements that are pushed to IFS from AccessPay at 7:30 every morning. By 7:31 or 7:32, something silly like that, all of those bank statements are in IFS going through an automated reconciliation process. That manual step-by-step kind of boring process that people get distracted from by someone coming past their desk if they're in the office, or the cat jumping on their lap if they're at home, maybe. All of those normal human things, we can get rid of the boring stuff, and they can focus on, okay, why has customer A paid me a whole lot more money than normal? What's going on there? And you can actually look at the real world questions that need to be addressed, rather than focusing on the mechanics. I think that's a really big step forward, and certainly in my mind.
Oh, absolutely. And I think it's a case that, if you're getting that on a daily basis, then, if a payment does go wrong, if you've made a double payment somewhere, or something's gone, just purely to the wrong account, or, an error's been made, it's much more likely you can rectify that if you find out the next day, than it is if you find out, the best part of a month later. So again, I think, having that information readily available like that is really, really powerful, isn't it?
Yeah, absolutely.
Just to add to that also, that integration with things in the same formats being presented means that anything outside of that format, anything can get picked up really easily. And also, because everything's so standardized, the risk, which is the title of this webinar, is mitigated, is reduced. Everything that we talked about, all the pain points, purely from the integration of IFS through AccessPay, the digital, the automation of the banking statements coming through without any touch points, mitigates risk. And the other thing also to mention here is that the ERP, the connector and the bank is like a three-piece puzzle. With the AccessPay Muzulu partnership, 2 bits of that puzzle are put together already. There's a ready solution there. Therefore, all that's left is connecting the bank, and then off the processes go, and the users then see the benefit of speed of transmission, accuracy, and formats, and all the good things that we've discussed.
Yeah, absolutely.
For sure. Were there any other questions coming in?
There was, yeah, I've had one come in from Steve from a manufacturing company. He has asked us, why shouldn't I just connect to the bank directly myself? That's a good question. Thank you, Steve. I don't know who wants to take that.
I'm quite happy to throw my 10 pence in on that one, if you like. I certainly from an IFS and an ERP platform perspective, the reality is that would require integrating with the bank yourself, and the banks by their nature are incredibly security conscious, and that's quite right in my opinion. But of course, in order to put a direct connection into the bank, you've got to have the skills to put that in place, and those are not simple skills. So, there's quite a bit of experience that's needed, and certainly from my point of view, organizations like AccessPay have been doing that sort of connection for months, years, decades, and the reality of that is that they have absolutely streamlined that process to the nth degree. They probably have something for most of the banks already in their back pocket. So certainly from my point of view, it's a much faster way to get that connection in play.
Yeah, I think the other part to that as well, I think, is that main companies often take the approach that, well, we can do an integration for this area, and they kind of view it as a discrete project, and it's one integration, and we do it once, and that's the end of the project. But in reality, Parv has mentioned a number of times earlier about acquisitions is a key way that things can constantly evolve. You change bank, you get additional accounts, you move into a new geography. Suddenly you're having to deal with all of these requirements on an ongoing basis. If you've got an integrated solution, effectively, in the IFS case, Muzulu are managing that integration with the AccessPay platform, and AccessPay are managing the integrations to the banks, which means, yes, Hamish mentioned there's the onboarding process, there's other things to do, but you're using people playing to their strengths really to manage the ongoing integration challenges, and you can focus on the business requirements, which I think is what most people want to be doing. So I think it's another really good reason when there are standardized connections available. It's usually a much more straightforward option than taking the other approach where you've got to effectively provide in-house support for it.
And just to add another thing also to what Dharam you've mentioned, so in terms of formats, the actual schemes, be it SWIFT, the ISO 20022, they're continuously improving those formats, making them even more data rich, so that those streams of information add a lot of value to corporates as they communicate to banks. And the likes of AccessPay are at the forefront within that space in working groups and discovery groups, so that the messages that get transferred are always up to date at that standard. So the customer, the consumer, the user of those messages is always at the forefront, in line with the industry as it's moving.
Oh, thanks a lot for that, guys. I think unless we've got any more questions coming in, anyone else got any on LinkedIn or YouTube? No. I would say just to recap on the session. Thanks very much, guys. It's been a really interesting conversation. Obviously, we've talked around the importance of reducing transmission risk and human error in these processes, because it's bound to happen. Also, the importance of speed in these day-to-day processes, to achieve that cash visibility and quickly identify potential risks, and the importance of kind of using consistent and reliable inputs across your entire corporate banking estate. I think there's been some really good sort of key takeaways to take away from this conversation. But I would say if anyone's got any questions following this session, by all means, get in touch with ourselves or with Muzulu. We're gonna share an on-demand link to this session, so please keep an eye out on our channels and you can watch this session back. But no, thank you very much to our guests, to Hamish, Dharam and Parvez for joining us today. And have a good day, everyone.
Thanks, Dan.
Thanks, Dan. Thanks all.